Welcome to the Sabrina Marie Show. I'm super excited today. We have some special guests here. We have some special guests that are experts in their fields. They have so much experience, and they're here to tell us how to move in this climate. This climate meaning that things are uncertain. We're not sure exactly what's going on, but we have some good advice from a financial advisor. We have a real estate mortgage loan originator, and we have an associate broker in the house today, and I will be introducing them to you. So first, let me go ahead and introduce you to Kelvin Oliver. Kelvin Oliver, he's the president of Core Mortgage, and he's a mortgage loan originator, and he has over 20 plus years experience in the business. So let me just give you a little example. When I first met Kelvin, which was back in 2004, when I first came to Richmond, Virginia, he's actually the first mortgage person that I met when I came down here, because he did my loan for my first home in Virginia, and he helped a lot of us New Yorkers move down here and get settled in to the state. So I am grateful that we are still connected and still friends, and to see how far you have come in your business. So I'm excited about that. So I'm introducing Kelvin Oliver. He is our mortgage person today, our mortgage expert, and we'll be asking him plenty of questions. Next, I also have Mr. Eric Stamper in the house. Mr. Eric Stamper is a trustee business tax advisor for individuals and business, and especially for small businesses, because small businesses have different needs. He has 25 years experience in the business, and man, I love a financial advisor because I'm the person who's always picking their brain when it comes to what's next in life. And next, we have Miss JoiE. Miss JoiE is a broker of East Coast Realty and Relocation, powered by eXp Realty. She has over 19 years experience in selling and listing residential and commercial properties, also selling virtual office space. She serves Fredericksburg, Richmond, and the surrounding counties. So that is our panel today, and I'm glad that they're here. But before we go on, make sure you check out our next video that's coming out on April 12th at 2 p.m. with Elizabeth Calder. Elizabeth Calder is a marketing director, brand director. She's worked with a Fortune 500 company, and as a marketing director, as the leader, she has 25 years experience in corporate America before she started her own business. And now she has went forth and started her own marketing business, and it's been super successful. So I can't wait till you see her interview that's coming up next. So I want to say hello, guys. Thank you for being patient. Hi, Miss JoiE. Miss JoiE is so cute. I love her. Okay. While Kelvin completed my loan for my home, such a hardworking, honest gentleman. Oh, let's see, that's a client. And she's also, I sent that girl to you too. She's one of my friends. And I sent her to you, Kelvin, and you did close on her loan, and you did work hard for her. And she says you helped her so much, that you are a hardworking, honest gentleman. So that's awesome that she feels that way about you. So let's go into it. How you guys doing? Say hello.
Hey.
Hello.
They can hear you, but they can't see you. They'll actually get to see the show later.
Okay, hey.
Miss JoiE said hello. Kelvin said hello, and Eric said hello. So guys, how are you guys feeling right now in this climate? How are you feeling with what's going on with the market, with the financial, with all the that's going on right now? Like, how do you feel about it? Kelvin, give me a little bit of your thoughts of what you think about what's going on.
So I think right now, with the uncertainty in our marketplace, we have to stand out and be the voice of reason, and also be the people to educate our clients in terms of what's going on, why it's going on, and to at least give some sort of direction as to how long we think it might last and what things lie ahead for us. So that's my take, just trying to be positive and optimistic as we get through this tough time. But I think our business, we're going to be the ones that help the country get back on course after the pandemic ends.
Right, that's true. And what do you think, Eric?
much like Kelvin said, we just have to be the steadying force. Because again, one, I think people are just fearful because of all the information and not a whole lot of um, finality to it. But I'm here. We do taxes mainly, and so we're still doing a lot of taxes and helping to steady the way to say, hey, this too shall pass.
Do you think that people are scrambling to get their taxes done because of this uncertain time? They're not sure exactly, like, oh my God, what am I going to do? I need this extra money right now. Am I going to get this money? You know, do you think people are like, you know, scrambling, not showing what the government is going to do as far as they're getting their money back for refunds or anything like that?
In terms of the 2019, the majority of people had already filed even before this whole thing hit. And so you are still seeing some of them going along their normal course for those who had appointments. You're starting to really see an uptick in the people who have not filed for a few years, right? Because of the stimulus, you need to have filed at least 18 or 19. So you're getting a lot of those ones who usually take 2 or 3 years to file a return to move a little bit faster.
Wow, how do you go back to that? I know someone who's told me that they hadn't filed taxes in about 8 years, and then they had their tax papers and they were saying that they wanted to file this year, and what should they do? And I was just like, I don't know how to go back and do that. You have to call a tax person, like you have to, do you just file for this year and then the IRS see what they haven't done and they contact them? Or they should be looking, because they don't even have the paperwork, you know, like as far as the W-4s or W-2s or, you know, those paperwork or anything like that. So how do they go back and do that? Like, how would a person do that?
Well, so you need to at least file to get your stimulus check, either an 18 or 19 return. So whichever one piece of that information you have, we can go start there. But each year is independent. So whatever happened in 16 is not necessarily the same thing that would have happened in 19. Right? Unfortunately for the person, if they are due a refund prior to 2015, they have lost the right to claim that refund. Mm. So it's not really, well, if you owe, you always owe.
They have to
do a refund.
Even if they don't get a refund, do they have to file it? Do they still have to file their tax? So say this person said they haven't filed in the last 8 years. They decided they want to file this year for the first time. Do they have to file for those other years?
No, ma'am.
Oh, no. Wow.
No, so I would probably do 16 at least to see, because a 16 return expires on April the 15th. So we would start with 16 probably and then do either an 18 or 19 because of the stimulus. And then we'll work our way backwards on the rest of them later.
That seems like a lot of work. It seems like, how do you get back to that? You know, like how do you find paperwork on that if the person doesn't even know where to start?
Well, in usual times when the IRS is working, you can get the information from them to at least do your federal return. But by their fact that they're not working right now, they don't have enough. The telephone assistants are not there. So it's going to be a little bit more of a challenge. But there are ways, I mean, most people you could maybe guesstimate, there are a lot of ways to get information or at least get a return file to save your place and save that potential 2016 return, let's just say.
Wow.
Refund.
That's a lot. I want to go ahead to JoiE real quick. JoiE, let me ask you a question. Have you seen any change in the market since this pandemic happened? Have you noticed people pulling out, not wanting to go forth and looking at homes, or they're changing their minds or anything like that? Have you noticed anything different?
Well, it's still a seller's market right now. Still a seller's market. People think it isn't, but the sellers are it's a seller's market, but they're being a little bit more, flexible right now.
So the banks are being more flexible when it's coming to purchase a home. I thought that they were being a little bit more strict.
No, they're not being too strict because you don't have as many people looking. Now, the builder side, I'm going to say the builder side is more flexible. Now, as far as the sale and resale is still a little difficult because there's not that many property out there. So with that being said,
inventory is low.
Inventory is low. Like I have one of the agents that I work with, and her in-laws want to put their house in the market, and those are in-laws. So you have to be strategic on everything that you do, because It's her in-laws. So I'm like, okay, they're getting a new construction. Can they move in with you? Let's be a little bit strategic, because you don't want anybody, Lord forbid, cough, touch something, and get somebody sick. You can't be too sure. More people are going towards the virtual tours, which with VXP, we do all that stuff anyway. Virtual tours, virtual meetings. I've been in so many meetings virtually. With our company, we're even selling virtual office space so people can do stuff online. They can still meet with their company online. So yeah, just a little bit more creative with the agents. Agents are more creative. You see more lives. You see more agents advertising by way of social media, getting the word out. Still, like I said, some deals to be made. I did a deal for with one of my clients, new construction. End of the month, they're trying to get something. Corporations are they still go by end of the month situation. So in the month, corporations are trying to sell. Now, somebody that's individual, they may have a bottom line that they want to meet, but they have to take in consideration there's not as many people maybe looking. And the ones that are looking, they've been looking for a little while, so they're hungry. So it's like I'm talking out both sides of my mouth, but I've done it where there's houses that's been going and it's multiple offers. But then you have the houses that have people that live in them, and it's a little bit harder because people don't really want to go into a house that somebody's still living in. So
got you. Right, that's the difficult part. I got you. That makes sense. So do you think that this is going to be our new norm? JoiE, do you think this is the new norm for real estate? Do you think this is the direction that we're going to go in after all this has settled down and, got a little bit under control and things like that? Do you think that this is going to be the new norm of how we do real estate?
Well, I'm just going to talk from our perspective. It's kind of like our norm anyway with the virtual tours. I like company's name, East Coast Realty and Relocation. I have done several deals with clients. They have not stepped foot in the house, and I have taken virtual tours for them, and they see the house when they close.
I thought only husbands did that.
No.
Because every house, I think my husband only saw one house that we ever bought. And we have bought a lot of houses in our day, so I think he's only bought one house. I mean, he's
not seeing it in person.
That's this one, actually. The one that we live in, because by this time I was wore out. I was like, honey, you pick whatever you want. I don't need more.
Well, yeah.
This is his choice.
This is the new norm now, though. I mean, people, like I say, they travel. I got a client coming in from California. Agents are doing things a little different. I know I am. I have a client coming from California, and even a local client that I had here, met with them to do the buyer's agreement by way of Zoom meeting. And then from there, we actually met at the builder's office. And the reason why I met him at the builder's office is because we made an appointment. You have to make appointments now. Made an appointment at the builder's office. Usually, when you go to a site, new construction site, you walk on in. Now they're requiring you to do appointments. They're only showing by appointments, which new construction is a little bit more safer because they have people to come clean the house ever so often during the week. And of course, got your face mask, got the gloves, got the hand sanitizer, and, Lysol. And we sat it's in the model. So we sat at one end of the table, and he was at one end, I was at one end, the builder's agent was at the other end. So social distancing. And then in one builder's place, we sat. He was in one chair, I was in another chair, builder agent in another chair. So we're just doing stuff different. But I think this is the way that it's been going, of doing a lot of video. People have been looking at houses online for a long time. So I just think that's the way, it's probably going to be for a while, but it's not bad. It's not like it's, Kelvin, the interest rates, how do they look?
Well,
yeah, I was definitely going to go into asking him that, because even though we're doing things a little different and the way we're showing and everything, how's it affecting, you know, the purchasing power? Are the interest rate, have they gone up? They gone down? Are they steady?
So just prior to the pandemic, rates were incredibly low. We actually closed a couple at core where the interest rate was under 3%. So we closed one, it was at 2.875, another one at 2.75, right before right before the pandemic hit. So business was great, everything was good, we were rolling along, and then the virus hits. So we saw rates start to tick up. We went from that point into the high threes. The Fed announced their rate cut, which helped to stabilize the market a little bit. So we saw rates dip, but then with more uncertainty, more volatility in the market, the rates started to creep back up. Now, having said that, if you have the higher credit scores, you're still relatively good, you know, mid threes, high threes, but it's the folks with the lower credit scores that are seeing the most in terms of adjustments or their rates going up. Couple that with the fact that the market is still volatile because no one knows when this thing is going to end, and that's creating all of the uncertainty. And so what we've seen is rates have spiked up for those who have lower credit scores, and we've also seen guideline changes, and I think that's been more of an issue than actually the rates themselves.
Yeah, let's talk about that. What are the guidelines? What's going on with that? And I think that's kind of unfair. You know, like, I mean, I get it. You know, the risk. No, the bank doesn't want to take the risk. They don't want to take the risk of them losing their money and bottoming out and have that whole big crash like we had back in 2008 and 9, you know, when we went through all that and everything. So I get it. They're protecting themselves too. It's just so disheartening to see that someone who has been pre-approved kind of get their pre-approval taken away a little bit. You know,
right.
or the interest rate changes, and if they're locked in, if they were locked in, would their rate change, like in the middle of this?
Well, so some of the things that are very important, and I think it's incumbent upon us to educate the clients. So what happens is when banks and mortgage companies, when we lock in a loan, basically a lock says that we promise to deliver you this loan within a certain time frame. And then that end investor is promising to deliver the loan to the secondary market. Well, what's happening now is with the volatility in the market, the rate locks, that's been a guideline change. So now all of our investors are saying you cannot lock a rate until you, number one, have an approved loan with an appraisal in place. That's different from before when we would be able to lock a loan, write a contract, we could lock it right there on the spot. And so you've seen a shift with that. So with the volatility, once again, they can no longer adhere to the promises because that's all a rate lock is just a promise. And so we've seen that guideline change. We've had guideline changes with regards to minimum credit scores. And so I've had some investors.
What are minimum credit scores right now?
I've had some investors that have gone up to a 680, meaning that they won't do a loan unless the client's credit score is 680.
Wow.
I've had others who will go down still to 620. And I have one investor left that still will go down to a 580. But you have to ask yourself, how long is that going to last? Everybody else has made the shift. So you know it's just a matter of time.
Right.
And I think that not only myself, but the realtors, we've got to be honest with our clients and we've got to give them this information up front. My recommendation to my clients, we need to have plan A and plan B because we don't know how this thing is going to shift. And to your question earlier, we can go in, someone's under contract and we've qualified them based on their credit score of say 630. Well, if that investor changes, let's say tomorrow and says, we're not accepting any loans with under a 640 credit score, I no longer have a home for that loan, which means that I need to have a plan B in place. The other big guideline change that is probably going to be on the way if this thing stretches out are going to be your state bond programs such as VHDA. Some lenders have already stepped away from VHDA and they're saying,
I've heard that.
We're not going to take the chance. The reason for that is, and it's not just VHDA, but VHDA and most other lenders have a provision in place that says, if you make a loan and that client misses one of their first 3 payments, you're on the hook. And so now we don't know who's going to have a job tomorrow, much less 3 months from now. And so with that being said, lenders just don't want to be on the hook for those loans. So they pulled away from VHDA themselves. But at some point, something's got to give. And they're thinking that VHDA, some of the down payment assistance programs are going to also go by the wayside, at least temporarily.
Right, and I'm sure that there's no money available right now. Well, there's probably no money available for like the down payment assistance programs right now. A lot of them probably are depleted. I do have a question. One of my guests asked, is this only in the state of Virginia? As Kelvin?
No. When we say state bond programs, many states have their own state-specific program that helps clients with down payment, et cetera. So ours is VHDA, but other states have different programs, but it's going to start affecting all states, and particularly the ones where the pandemic issue has really hit hard. You know, the northeastern states, the far west. But, you know, we'll start to see other states as their numbers pick up in terms of the pandemic, that they're going to start experiencing some issues as well.
So let me ask you a question, Eric. Eric, being that you see all these different changes and being that you're a financial advisor, do you suggest that people go out and purchase now, or do you suggest that they wait till the dust settles?
So I guess it depends on your personal financial situation. If you have an income that is pretty constant, then why not? Especially if a deal can be had and all of this. I'm sure there'll be some, as JoiE mentioned, some builders who were building a specific house for a specific person, who now they can't deliver to that person because that person cannot qualify for a loan because of their unemployment perhaps, or their financial situation became unstable. So they don't want to commit to a loan, whether they can obtain one or not. And so to me, that's a buying opportunity. I was looking to buy a house sometime soon. Here's a house that I could live with. And especially if that house, if the house is selling for a deal. So yeah, I would. But in a lot of cases, again, things are more unstable. And so if you're unstable, don't really have a good idea what the future holds, you're going to have to, it just makes sense, it's just prudent to stay put, right? Draw down on some of the emergency money we should have had. You know, the general guideline, we're supposed to be having at least 3 months worth of emergency money.
So how do you feel about that now with the new guideline? Do you think that's a significant amount of money to have, 3 months in reserves for emergencies? Or based on this thing right here, we look like we need a little bit more money. What do you think?
Well, 3 months would have still get us past it, because again, you'd have April, May, and June. And for the future, right now, everything is supposed to expire, all of our restrictions, somewhere around the mid part of June. And so we get back to work and start generating some cash. But 3 months was always the low end. If you wanted a guarantee, I would always, people ask me a question, how much emergency money should I have? 6 months worth of living expenses. Living expenses have certainly gone up because now that we're all home, we're eating way too much. So whatever we had in our budget for food is not what we're actually spending right at this point in time. But I mean, that too can be controlled if we were forced to control it.
Okay, let me ask a question. So a person who said we go through this thing 3 months down the line, right?
Okay.
And let's say it stretches on 6 months. We then went through our emergency funds after the first 3 months. Let's say people have little unemployment, little things coming in like that.
Mm-hmm.
What do they go into next? Do they go into their retirement fund? Do they go into their 401k plan just to live? Do they live off their credit cards? Like, what's next if there's no more cash and you barely get a little bit of unemployment coming in? Eric?
So yes, ma'am. Well, so your retirement plan, what I like to get people to see is your retirement plan. Yes, ultimately you are starting to save for your retirement, But as we know, life happens in between. And so there are a lot of disruptions in life, right? The most common one is paying for kids' college education, right? And so you have to still survive. And so if the money was reserved for your retirement, but if the need comes, I will most certainly take it from my retirement before I would get a cash advance for my credit card. That would be way down the bottom of the list, as my resources have totally been drained everywhere else.
Asking a question about what's next. Once you spend all your cash money, you don't have a regular income coming in, and you know, all you have is things like, you know, college fund, you have your credit cards, you know, your 401k plan, you know, you have things like that. What do you do next? Like, you're finished, there's no more money coming in.
Right.
Like, how am I supposed to live? Because a lot of people want to know that.
So furthermore, as your cash was drawing down, hopefully you were making some of those decisions. So you didn't wait till you were totally out of cash. Because as we know in life, when we need something, it takes longer than when we're just doing it just because. So start drawing down on that 401k or that college savings account, which I would do way before I would do cash advances on my credit card.
So you would go to the college funds first before you start to use your credit card. If you have college fund for kids put to the side, then if, let's say, okay, we've done that, because we don't know how long this thing gonna last. Let's say it lasts a whole year. We don't know.
Right.
And so, okay, the college fund, so the credit card should be the last thing you should do at this point. That's what you're saying.
Yes. Yes. One, because of the interest rate on them. But two, eventually, again, if you're not having the income coming in, how are you going to pay the bill that comes next month?
Right.
And eventually end up ruining your credit. And so that house you were considering buying sometime soon now gets pushed back 2 or 3 years as you lead back into repairing your credit and, you know, putting your piecing your life back together.
Gotcha. Somebody's asking a question.
Sure.
They're saying our 401k plan is going down during this pandemic.
Okay. Most 401k plans are mutual fund based. A mutual fund is a collective investment from all of us together. So they put our money together and would buy a serious stake in big, larger companies. Well, if the stock price of those companies are going down, the value of our 401k or any of our investments would be going down. And so it rises and falls basically with how the stock market is rising and falling. Right now, it seems to be a jittery thing, as Kelvin mentioned earlier. It's up one day a whole lot, but then down the next day a whole lot. And it's just every day depends on the day. So it just goes to prove that it's hard to time the stock market. And so as you see, when you're on different age horizons, should change your investment objectives. When you're younger.
So speaking of the stock market, should people be investing now? Like, should they be?
It all depends on your disposable income. The harder thing about it being in a stock market is you are waging a bet on one particular company or another. So most average people don't have the wherewithal to just be in the stock market per se. And that's why you have mutual funds. Mutual funds help us to collectively invest in a diverse pool of things. If I want to get in the stock market myself and I decide Philip Morris is a good deal, then I have enough resources to buy me 4 or 5 shares of Philip Morris. Not enough to change my investment dynamic any. Versus if I put that same money in a mutual fund, now I have a small piece of hundreds of companies. So there's somebody, a fund manager at the mutual fund who's determining that, oh no, Philip Morris stock is going down now, so we're going to take some money out of that and move it towards healthcare, which may be rising in this environment. Because again, we know pharmaceuticals and whatnot, we're depending on them to help save us. So that's what makes a mutual fund probably more apt for the average person. And then
so the average person should be putting funds in their mutual funds right now instead of purchasing single stock. I mean, as a suggestion, is that
yes.
They should be looking?
One, because it limits your risk, and two, because again, with averaging, somebody is helping you determine the whole landscape instead of you sitting in front of your computer all day long trying to figure out who's the next Apple. Right. So there's somebody who does that. And again, we can have a bigger stake in Apple if, let's say, the 5 of us pooled our money together and buy Apple stock. So that would make us a small mutual fund.
Got you.
But when you think of a mutual fund, and we've seen advertisements for T. Rowe Price or Vanguard or Fidelity, they have billions of dollars at their disposal at any one time. So when they decide to invest in the different sectors, they can really do it in a meaningful way. Unlike if I had to buy stock today, I might could buy, get 5 shares of Philip Morris and that's it. So
right,
when Philip Morris out of business, I'm done.
You get more bang for your buck when you go through mutual funds instead of buying a single stock.
Correct.
For the average person who doesn't have a lot of money to really
Correct.
Put out there like that.
Correct.
Awesome.
Right.
Awesome. That's some good advice. You had a lot of questions about that. A lot of people's interested in what you had to say about the mutual funds and the stock. And I'm going back to see if I see any more questions as we're talking. Go ahead.
Well, one last thing about your 401k. If it seems to be going, if you look at the value of it and the value is lower, I mean, it's really like your retirement plan is on sale, right? And so we like to run to the dealer's New Year's Eve sale because we know everything is marked down. So we take everything we can scrounge together and run the dealers and spend it all. But now your stock is on sale and we don't think about it. We really think about jumping out.
Right. And so do you think that it's healthy for us to watch it right now so much or kind of fall back and just, because I remember when I was watching my stock back in 2009 and 10, right. I was freaking out because I was like, oh my God, I'm losing all my money. Right. I need to get up out this thing. And I did panic and I lost thousands and thousands of dollars because I panicked and I withdrew my money. I'm trying not to even look at it right now.
And you should not. And so once you sold the 401k and took your money out, you have actually realized your loss.
Yeah.
Right now, when you look at your, when you log on and you look and see, I had 5,000 yesterday and I have 3,500. That's an unrealized loss.
Yeah.
Stay there for a few days. The value may go back up to 5,000.
Right, and that's exactly what happened.
Today, you're done. You lost money.
Right back up. I was so mad at myself.
Right, and a lot of people are for that very reason. So, stay put. Don't get nervous just yet. Until it gets to a point that you really need the resources. Then, of course, you'll have no choice but to sell.
How does the stock market affect the housing market?
Probably just with, as Kelvin mentioned, the bonds and the interest rate. That's going to be offered to you at some point in time as the Federal Reserve kind of controls all the rates across the board. But as we're feeling better, or as the market is doing better, banks are more willing to lend money, ease their guidelines up some. Again, if you go back to your 08, 09 market, I'm sure Kelvin could attest to this, that it was a lot before it was a lot easier to get a loan. As a result of the fallout during 08 and 09, it's a whole lot more difficult to get a loan today, even still, almost 10 years later.
Yeah, I think that it's a little bit more difficult than before, but not impossible. Now I feel like it's really going to get tough for people, the average person who has that dream of that just basic 3-bedroom, 2-bathroom home. I feel like it might get a little bit tougher I'm not sure, but I hope not, because there's a lot of people out there that have that first home dream, having their first home and things like that. And I don't want that to be snatched away.
Well, I'm an eternal optimist anyway in life, unlike most accounting people. And so there's always a way, so be willing to put the work in, if you will. So even if they change the guidelines of the getting a mortgage sum, you just have to, it's just one more road thing we have to work around, but it's never impossible.
Right.
And so we just have to be a little bit more patient, because it might take longer than you thought. But if that's where you're going, you just keep on that same road and you'll get there eventually.
Right. So they were saying that there are going to be a lot of credit forgiveness during this time period with the mortgages, like with people doing forbearances for their homes, putting it on the back end, the interest being put to the back and everything like that. How do you feel like it's going to affect the market, Kelvin?
So actually, what you just mentioned, that's one of the largest problems that's facing the mortgage business right now. So because the government has come out and said that they're encouraging banks to go into forbearance agreements with clients, because of course, a lot of clients are losing their jobs, so they need that type of flexibility. However, herein lies the problems. It comes in with mortgage servicing, meaning the companies that collect the mortgage payments, right? So if we have a large number of people who actually go into forbearance agreements, or let's just say we have a large number of people who aren't making their payments, remember, those servicers are on the hook for delivering that money to the end investors. So therefore, you've got a run on liquidity, because they've got to have enough cash on hand to make those payments, even if they're not receiving the payments. See how that could affect things? And so now, when we weren't in this pinch, there was more money to lend in some of the what we call non-QM, non-qualified mortgage markets. So an example of that would be the bank statement loan. Perhaps I can't show my tax returns to verify my income, but I could use bank statements. That would be considered a non-QM loan. That market has completely gone away in a matter of weeks with the pandemic, because there just isn't the liquidity available. And so the mortgage servicers are the ones who are creating a large amount of the volatility, is because they are thinking or anticipating there's going to be a wave of folks that can't make their mortgage payment. I can't remember what the exact number was, but what did we see? 6 million unemployment claims? Was it that? It was several million, let's just say that. And there are more expected. Right. So with that, we have a pretty good inclination that there are going to be a lot of people not making their mortgage payments. And therein lies the big issue with the mortgage industry right there.
Wow, this is crazy. It's a scary time. I know a lot of us had went and deferred our mortgage and things like that, and for a couple of months and everything. But that doesn't mean to go spend the money. That means, a lot of people think that, I got some free up money. I'm not used to having this much money in my account at the end of the month. But I feel like, be smart and strategic with it, because we don't know what's going on. And to put that mortgage money in your savings account to hold on until this thing is over. So when the payment is due, or if you go back into the repayment plan, or you want to just catch up and just pay it all off or whatever, you'll have those funds available without it being as much of a stress or anything like that.
Yeah, Sabrina, let me say one more thing too. Because there haven't been any hard and fast guidelines as far as who would be eligible to get the forbearance agreements, and the mortgage companies or the mortgage servicers aren't quite clear about that, this is another example that people are fearful of. I have somebody that may have closed on their home over the past 2 to 3 months. Mm-hmm. They hear, hey, I can get a forbearance agreement and not have to make my payment. So I want that agreement too. Let me push my mortgage payment down the road a little bit. Well, all of the people, whether it's mortgage lenders, mortgage brokers, such as myself, we all have covenants as well that says if you have an early payment default, which basically means the person didn't make their payment, I'm on the hook for paying back any earned compensation for those loans as well. So Now you can see
Really? I
why
did not know
people,
that.
yes, why people are so nervous.
Wow.
So think about that and not to put JoiE on the spot, but as a realtor, think about if you sold a house and the person didn't make their payment or their second payment, or third payment, first or second payment, and you had to actually give back your real estate commission. There's no way in the world the Association of Realtors would allow that, right? But that's exactly
how much work you do behind the scenes.
right. But that's exactly where we are on the mortgage side. And so now you start to see the trepidation on why one might start to raise the credit score requirement. I've had some investors that say, if you own multiple properties and you're receiving rental income, yeah, sorry, temporarily, we're not going to let you count that rental income. Their fear is you may be okay employment-wise, but your tenant might run into a problem that will affect you.
All the different aspects of everything.
There you go. So everybody's trying to position themselves because they're not sure what the new guidelines are going to say. And what if the government comes out and says, well, no, you have to give them a deferment. Nobody knows what the unintended consequences are. So it's that uncertainty that is causing the instability that we're seeing.
So how long usually mortgage people are responsible, not responsible, but in danger of losing their...
Usually it's 3 months, but it could be longer.
I didn't even know that. That's good information. I didn't even know that. That's good to know.
And one other angle is financially, you should only apply for deferment or forbearance if you were really in a bad situation.
Right.
Because you should know that although they have not allowed you to, they deferred your payment, so they might not ruin your credit, but of course, interest is still accruing. And so the further you push the loan back, the payments back, the more interest you end up accruing on the loan. I'm sure Kelvin will tell you when you go through.
You still have to pay interest anyway. Usually, not much is going to your principal anyway. I mean, maybe you can pay on your interest and not pay the principal, right? Could you do that? Could you just pay on just the interest of your mortgage loan and have the actual loan to the back end, so when it's time for it to be due, you don't have so much of a big bill?
Well, so then to your point, early in the loan, the majority of it is interest, and so you're not deferring much. You'd be deferring the $20 worth of principal you're paying, if that was your mindset. There's one company, and one of the larger lenders, Bank of America, Wells Fargo, one of them, did grant one of my clients a deferment, but they had to pay all 3 months by October. So no, you don't have to send me your April payment, your May payment, or your June payment, but then you do have to send them all to me by October 1st.
Right.
And
but if you're smart and you know that you're just doing this because you don't know what's next, then you would be a responsible person and put that money to the side.
Well, hopefully if you had the wherewithal, I probably would just, if somebody asked me my advice, I would probably just pay it if you had the resources. And then once you see things are starting to look bleak, if you think you can see past July, so if you have a financial situation where, okay, I'll weather the storm between now and July, I would go ahead and recommend you go ahead and pay it.
Okay, so that's for the person who basically is prepared, who have emergency funds put away,
right?
And for that rainy day to weather the storm. Right. But I know a lot of people who don't have 3 months of savings put away.
So then you would stop, but then again, even in your stopping, what's the likelihood you're going to leave that money still sitting in your savings account? So again, you'll be using that money for living. So yes, if a deferment is available, but just know you're putting yourself further in the hole over the long haul. Mm-hmm. So today you're good because I don't have to pay the money today, but that money will multiply if you take you 20 years to catch up these 3 payments. Right. So then if that's going to be your position, Sabrina, then you would say shortly after, okay, now I got to come up with a plan to pay a payment and a quarter.
Right.
Or a payment and a half, coming right back out of this thing so that you can catch back up in little or no time.
It just seems like a hard situation to be in, for someone to make the best decision that's for them.
For them, right? But again, it still highlights the point of the things. Again, talk about my clients all the time. Is we have too many wants in today's time, so we don't really have the resources in case of an emergency. So when your transmission goes out in your car, or something, all of a sudden the water heater breaks and floods the whole basement. You're running to the payday loan people who are killing us. But you have no other choice. And so even if you didn't have the money to pay for the unexpected expense, where you get the money to pay the payday lender back in 2 weeks? And so
what they supposed to do? Not take
payday loan people.
What the person supposed to do? Do they not take the forbearance and take the risk of losing their home after 3 months of not being able to make a payment?
No.
Or they go ahead and take the little bit of money that they have and make the payments, but they're not able to eat or to do any, what do they do?
It's a moratorium right now. So they're not too many people losing their homes right now. So it should be a moratorium on the foreclosure market right now. So you pretty good right there.
Well, so I'm with you, Sabrina, about using the money for.
I just want you to break it down for my audience, Eric, because I have a lot of people I have middle class people, I have upper middle class people, and then I have friends that are not in a position to have any savings. They live check to check. So I want you to break it down for the check to check people. How do we take care of them?
Okay, my biggest point, and what I was just trying to make is leave those payday loan people alone. Period. End of the sentence. They should be just act like they're not even there, because you're putting yourself further in a hole when you get a payday loan. You never get out as a trap that you never get out of, and when you do get out of, you take $100.
Say it again.
The payday loan. The whole payday loan industry, leave them alone. Act like they don't even exist.
Okay, got you.
Because once you get in, it's almost like the mafia. Once you get in, you never get out.
So you feel like that about those SBA loans? Because I'm a little. Okay. I applied. Don't get me wrong. I applied, and I haven't heard anything back as of yet. But I'm a little afraid. I'm gonna be very honest, because I don't have enough knowledge on this loan. I know that they freed up some money for small business people, whether you're a sole proprietor or you are an independent contractor, a LLC, a small businessman. Yes, I understand that they loosened up this money for that. I'm a little afraid of the back end. Okay. I heard about loan forgiveness up to $10,000.
Right.
What's going on with the taxes? How is this going to affect me later? How's it going to affect my taxes later? How is it going? How is this going to affect me later financially? That's what I feel like it's just not that simple as they're saying on TV just to apply for this loan. And they still pulling your credit.
Yeah.
How many times you going to pull my credit? Who's all these people? How does this work? Is it the government, one government that's doing the SBA loans, or they split them out to all these different banks, and every time they go to a different bank, they're pulling your credit, pulling your score down? Explain to us what is going on, please.
So at any time, so not just now in this environment, anytime you get an SBA loan, the government has nothing to do with it. It's all your local bank does all of the underwriting and approvals and all those things. The government is just guaranteeing the loan. So it's giving the lender a little extra security measure to do that particular loan.
You heard that, guys?
So
repeat that again.
SBA does not make any loan.
The government is not getting a loan. The loans is going out to different banks and different things like that.
Money is going to the bank, yeah.
Right.
The bank does all of the underwriting.
Right. So when you apply for this loan, what are they doing? Are they shooting an application to banks, or you got to take your actual application to a bank yourself to send it out to somebody?
Well, so we heard some disturbing news yesterday. There was a portal the SBA set up, but their portal, I guess, was overwhelmed. So what was actually happening when people was putting their information in the SBA portal, their information was actually going to other individuals applying for loans.
I heard about some kind of breach.
And so it's just like some sort of technical failure because so many people are putting the information in there. But by rule, any SBA loan is actually lent by local lenders, just big lenders, just your SunTrust and Wells Fargo of the world. So whoever you bank with, you ought to be sending the loan information to them.
Well, I sent my loan information to Bank of America. They told me I didn't have enough business with them. I just had my business account, but I needed a credit card with them. I needed this with them. It was just like.
Therein lies the rub. As Kelvin, you talked about earlier about how the people keep on changing the rules of the game, right? And so you'll go to Bank of America and say, hey, you got the backing from the federal government with my loan. And Bank of America will say, get out of here. We ain't giving you anything for whatever reasons why they pushing you out the door. And so SBA does not ever loan money directly to a borrower. They only deal with the loan guarantees.
Right, so the guarantee doesn't guarantee a certain interest rate or anything like that. It's just guarantee the loan in general.
It's guarantee the loan in general.
For whatever their guidelines and different things like that.
Correct. So you're saying that Bank of America, you don't have to, excuse me?
I think it was a little misleading how they presented the information to small businesses.
Well, that's how our government does. I mean, in all administrations, and not just this one more so than others, but that's just the way stuff come out. My phone has rang 3 million times since they talked about the stimulus package. And that's all everybody wants to talk about. Is my check, how am I getting it, what happens if I'm on Social Security, all of the different little criteria. And really, because the IRS is closed, so we can't really get any guidance. I know what you know. And actually, most days, the customers know more than me because they listen to the morning news when I was here doing other people's returns. So every time there's an update, I don't hear about the update till later that evening because I'm here grinding and everybody else sitting at home clicking every different channel. And so they say they're going to create this portal to make sure they have the direct deposit information correct. I would advise everybody, don't click on anybody's link to get to the portal. If they do create a portal, it'll be directly from the irs.gov webpage and go straight from there. You're going to have a whole bunch of people sending you emails and stuff. If you want to check on your direct deposit, click this link.
Okay, someone had said they only forgive the loans for 8 weeks. Is that the $10,000 or is it above $10,000 that they forgive for 8 weeks? Like, how does that work? Or the whole $10,000, like if they give that, if you get approved for that $10,000, is that just forgiveness forever, or it's all of it, anything that you have to pay back after a certain amount, after 8 weeks?
So the SBA has money in 3 different pots, right? And so the smallest pot, the one that you're talking about forgiveness, again, broad strokes, they don't have no details. They said, yes, if you borrow less than $10,000 in this economic injury disaster loan program, you will not have to pay that $10,000 back. So again, big broad strokes, we don't know. I talked to a lady, a banker at BB&T on Wednesday, and she said that it's constantly changing. So they don't really know the answer for real. They said that BB&T as a bank gave all of their bankers talking points Wednesday morning. She said by Wednesday, by 5 o'clock, they got an email and say, take that and throw it in the trash. And just if somebody got a question about a program, take the loan application and we'll get back to them. And so the bankers don't even know. But according to what they said, if you use that first pot, the economic injury disaster loan program, 10,000 of that would be non-repayable. The second pot is the just a general SBA loan guarantee, where if you just take money, you have a business that's suffering, you take money, you can use that money for anything. Just larger loans. It's not a forgiveness program. It's they stretch it out for 30 years if that's what you need, and they have low interest rates. So it's supposed to be between 2% and 4% interest on those particular loans. And then the third pot is
they're giving out those loans so easy. I just don't feel like they're giving out those loans.
They don't. They don't.
You know, I feel like it's just
trying to paint a rosy picture.
This led a lot of people, a lot of independent contractors and things to make them think that this loan was going to be a big, easy thing to do. But I feel like unless you have your business in order,
right. order. Yeah.
Right. Order, you know,
right.
paperwork trail,
right.
file them taxes and, you know, everything in order. It's not as easy. And there's a lot of independent contractors out here that is just that. They're, you know, they may have their LLC and they may have their tax number, but they're not taking paperwork in the proper way, you know, doing payroll the proper way, keeping a trail the proper way. And so I think that makes it a little bit more difficult for when the banks and stuff are asking for information and they don't have that information and put it properly. So I feel like, you know, a lot of small business are going to have a little bit of trouble when it comes to that.
But again, we'll go back to something Kelvin said earlier. I think as professionals, it's our job to keep honesty, to keep it real. Mm-hmm. And so, you know, even in normal times, when you have companies that come, like you just mentioned, who have the documentation on all different levels. And so I handle all of them. But again, you have to tell them in the future, you know, going forward, you may have skated by doing it halfway for now, but there is a repercussion sometime down the road. And so if your goal today is just to save taxes, well, that's one goal. And there's a way to accomplish that goal, but how does that goal figure into your overall future?
Right. And that goes to that whole tax things, you know, a lot of businesses, we like to write off as much as possible just so we can see something back at the end. But at the end of the day, when it comes to having some purchasing power, you know, we got to look at a lot of the banks, they look at the bottom line. They're not looking at your situation of, listen, I had a hard year, I need a little bit of money back. You know, they're not looking at that. They're looking at the fact that.
And I'm sure Kelvin sees that all the time.
Right, Kelvin?
You know,
absolutely.
I'm telling you I made 50,000, but my papers say I made 12.
Right.
And we can only go by the 12.
Exactly.
Right.
Kelvin, do you recommend entrepreneurs to go back and amend their taxes if they're trying to purchase a home and they've done that so that they're able to purchase and then, to fix it?
Well, what I will tell them is consult your tax advisor.
Good answer.
Right.
I was trying to stick that over in there because I know we don't play that.
Yeah, so that's
your local professional. Stay in my field.
If you're doing your taxes, I'll say call Mr. Stamper and get some guidance and get back.
I don't know nothing though. And all I can do is give you an answer. If you want to add $28,000 to your tax return,
right?
Here's how much more it's going to cost you to add that money, and then there'll be interest and penalties on top of that. And so, again, if that's what you want to do, again, you're telling me what to do, because again, I follow kind of your direction to.
Okay. Follow my directions right. Follow my directions right now, and tell me how good is this.
And so one last thing we talked about the SBA. I told you there were 3 different pots of money. So there's one for this economic injury disaster loans, which gives that $10,000 that may be forgiven. Mm-hmm. You've got a general pot that you can use for general operations. They don't put any restrictions on it, which you'll pay that back. Okay. And terms will be determined at closing. And the last one is the paycheck protection program.
Right. That's
so again. It's going to depend on a company being able to show that they actually make payroll payments. They actually pay people through some sort of payroll system, and you issue a W-2 to your employees at the end of the year.
Or 1099?
Payroll is W-2.
W-2 only.
Employees only. So you're an employee. If you're an employee, you have to
you have
get
to
a
have a
business.
payroll system, or
Yes.
can you? They have to have like went
Yes.
through SunTrust or ADT or things like that. They would have to have that.
Yes.
Or they
Because
could
part of
do
the
it
application.
old-fashioned payroll where you write it down and you make a spreadsheet. You can't do that.
Well, you could probably initially submit that in, but when they confirm with the IRS, which again lies in a problem, most SBA loans, again under normal conditions, you cannot get an SBA loan unless you can verify your tax return. Right? Under normal conditions.
Well, someone says that the application states that it's also 1099 as well for the PPP loans, that they're able to do it as well. I don't know. I have to go and look myself.
And I will have to trust customer on this one because the customer who just went through the process had to submit their last 4 quarterly reports. And so
you had to have under 500 employees.
Under 500 employees. Yeah. Did a business for, I think it was 3 years or something. And in order for it to not be paid back, you have to prove you spent 75% of that money on either payroll taxes, benefits, health insurance, whatever, rent, and utilities.
So 75%. I was wondering, just because I was just doing some numbers and stuff.
Right.
But I was wondering what the percentage was. Thanks for telling me that.
then it will not be.
I hear that 75% of it.
If you use that last category of the PPL, has to be used for those 3 things. And if you can prove that, then the loan will be forgiven.
Proof. Proof. You got to show proof.
You can show proof at some point. But what I was going to say is SBA generally, you have to verify, they usually verify your information you gave them through your tax returns, right? And with the IRS. And so again, another sticky point, have they suspended that? Especially since the IRS is not there. We don't know.
That's true. That's true.
So not only are they not there,
how does this loan affect the taxes though? Do we have to pay taxes on that money? Do we have to report that on our taxes next year? No, because the bottom line it's a loan. And so any loan that you get, you do not pay income taxes on a loan or a stimulus. But if it's $10,000, isn't it considered a grant? I'm asking.
No, it's still a loan because I'm sure even if they're going to forgive it, there are criteria for forgiving it. I'd be one to bet you. So you got to be able to prove to the lender you met this certain criteria. Must, like we said with PP, the payroll protection, right? You spent 75% on payroll or related costs, utilities, or rent. So show me cash flow checks that you did that, and we'll wave our magic wand, and that'll be that.
And so this is not credit score driven, even though they're checking your credit. They're checking the strength of your business.
Well, they haven't specifically said it. Like, so again, it's one of these things, there's not a lot of information.
Right. Like for instance, I remember looking on the website and I saw one company that does the PPP and I was looking at their guidelines and what the interest rate was. The interest rate was actually 10% all the way to 34%. I was like, that's kind of high. And they had what their guidelines were, but they said that they were checking the strength of your business and they wanted to look in your bank account to see like what your deposits and things like that were.
Well, that was that lender's guidelines. And so again, SBA doesn't make the loan. All they do is guarantee it. And so I'd imagine, because just like in our personal life, there are payday loan people for businesses. And so like you said, you saw some lenders say they're going to charge up to 34%. The government never guarantees that, qualifies what rate you're going to pay. Again, kind of like much like an FHA loan.
Right, because this loan can go to any bank, and so you don't know, based on your personal.
So that bank says, if you come in here with a 600 credit score, we'll do the loan, but we'll do it for 30%. It's up to you to decide how bad you want the loan.
And so I've seen that they're suggesting people to go ahead and apply for these loans.
Well, anyway, right.
And once they are approved or not approved, then you make the decision whether you need it or not.
Right. Right.
You suggest that people go ahead and apply so that they can have that back pocket for the worst case scenario.
Oh, absolutely. It's always good to have but as business people, what we should be having in place all along is a line of credit. So if you already, when times are good and we don't need anything, so again, the time to apply for stuff is when I really don't need it. I just need to have it in the drawer just in case. Mm-hmm. So if your business was, again, along the way, listening to all the things I say to you over and over again, you would already had a checkbook in your drawer already before all this hit. Mm-hmm. So that you could be prepared. So again, if my money run out, I got some extra money right here that I can already depend on. You know, but again, in times like this, everything takes longer. You know, again, they talked about the unemployment, that, okay, now self-employed people were eligible to get unemployment. That's what the governor said on TV, right?
Say that.
So first, you can't, the portal is so overwhelmed, you can't get on. If you do get on, it's slow as crap. Mm-hmm. And then a customer who did the unemployment, who is self-employed, did it early, so he got in and got out, he got denied.
Right. So they got back again.
They got to appeal and all this kind of stuff to, you know, like, okay, did I put something wrong in the computer? We don't know.
Right, because there's no coming back.
Right, because it took forever to do the appeal, because that's online as well. But again, apparently their portal is jammed up. So he's just sitting back waiting and don't know where his money coming from.
This is crazy.
And Sabrina, on a side note, so my commercial banker gave me a call 2 days ago and was telling me about the SBA loan offering. The good news was they were offering the loan with a rate under 6%. Okay. Now, it required a 720 credit score. So, you know, under 720, they weren't doing it. So that was the information that was relayed to me through my commercial banker. And so like Eric said, every lender is different, but that was their criteria.
Wow.
I need him too. Yeah.
Well, I don't know. It just seems like it was really hopeful when they were talking on television about these different loans and different protection plans and things like that. And then when you get in the thick of things, it just gets a little frustrating. But I guess the key is to keep pushing and keep checking and keep going back and to know what's best for you. And before we end the show, because we've been on for a little while now, and we had some really great guests, and they're asking a lot of questions. I'm trying to get them in while I'm talking to you guys because they're asking me questions. I checked back at this for clarification. The regulations that came out last night make it very clear.
And sole proprietors are able to begin applying for PPP loans today, Friday, April 3rd. Independent contractors who file their taxes using 1099 forms have the ability to apply for their own PPP loan beginning April 10th.
Okay, there you go.
That's information. Well, one of our guests, I guess she wanted to look it up so we can get that information out there as well. She was supposed to be one of our guests on the panel because she's she's a business person, and I wanted her to talk about business in New York. You know, New York got a lot going on up there. My family is from there. Y'all pray for New York. Yeah. My mom is still there, my aunt is there, and it's a lot. It's real hectic up there, and it's real dangerous to be outside. I pray everyone, they stay inside and listen to the guidelines. The governor is doing an amazing job to me from what I'm seeing. He's been in the trenches with the people. So, you know, we're just praying for everyone in New York, and we're praying for people around the world. For here, we're all in quarantine right now. We're doing things different, and, you know, it's a little different, but we're going to get through this as a people, and we need to stick together and make sure we're still connecting with one another. A lot of us are introverts, and we like to be alone, but that could be a little dangerous. So, you know, for your mental health, make sure you're checking in with your family, your friends, and don't shun anyone away. You know, just send back a text, hey, I'm good, you know. You don't have to be a lot, but be careful. Watch what you're eating at home.
Everything.
Everything. That's right, everything.
Everything.
Watch what you eat at home. you know, you want to get caught up in that refrigerator and all the junk food. Make sure you're taking your medication. Make sure you're taking care of yourself. Make sure you're washing your hands and everything, and pay attention to your body. If you need to call the doctor because you feel something that's not normal or feel a little different, don't be afraid to call the doctor and talk to them and give them your symptoms and everything, because we want you to be safe. I want to take this opportunity to thank everyone for tuning in to the Sabrina Marie Show. We had such an informative show today. I got a lot out of it. I can't wait to turn back and look back at this show and to go over it again, to get some good information so I can jot down some notes for my personal financial health. Because like I said, I'm a financial person. I'm not a doctor. So I'm going to bring you financial health to you. I'm going to stay in my field. So I'm super excited about what you guys shared today. You've been great. I'm so glad that you did connect with me to be able to bring this to the audience. We have a lot of people that call me and ask a lot of questions and different things like that. So this is a great tape to go back and to, you know, to see what fits for you, to see what fits for each individual person. Kelvin Oliver, like I said, he is the president of Core Mortgage, and he's a mortgage loan originator, and he has 20 years of experience. Kelvin, give them your information of how they could reach you for business, give them your social media and your business information so they can get in contact with you.
Sure, you can reach me, Core Mortgage. We're located at 7400 Beaufort Springs Drive over in the Boulder, Suite 300. Phone number 804-564-5644. We're on all social media platforms, Twitter, Facebook, Instagram, LinkedIn, and email address koliver@coremortgage.com. And we're on the platforms as core_MTG.
Excellent. And now, Eric, financial advisor. I love a financial advisor. How can they reach you?
Probably the best reach me is go to my website. I'm a little slow on the social media uptick because I'm old. I can't.
You're not on the website, right? Because I tried to find you.
Yeah, I have a website.
You're not on Facebook? Are you on Facebook?
It's a page underneath my page. I can't figure that out why it's like that, but let's say the best place is my website, VA First. That's V as in Victor, A as in Apple, FIRST.com. And my email address is eric@VA-First, and the phone number is 804-222-3498.
Awesome. And Miss Joy, come on, girl. This is my favorite girl. She's my little mentee. You know, I never had a female mentee before.
Mentor.
Mentor. She's right. My mentor.
Get it right.
Right. But I never had a female mentor before, so I love it. This is different. Go ahead, give out your information.
You can reach me on Facebook, of course, JoiE Boykins. JoiE Boykins. Joy is spelled JoIE.
Get that right. I always mess up like that. Go ahead.
Yeah, drop the Y, add IE. JoiE Boykins at exprealty.com is my email address. Yeah, Facebook. I'm like Eric, I'm old school. Just give me a call, 804-248-0109. 804-248-0109. And yeah, just give me a call or go to my webpage, Facebook, and hit me up. I'm on Instagram too. JoiE Boykins. And it's only one way to spell joy. JoiEBoykins.
You got that. We had an awesome panel today. They did an awesome job. I hope they answered your questions. If you have anything else that you want to ask, send your questions into me. I will go ahead and forward those questions to the professionals with your information, and then maybe you guys could connect and do business together. I'm so happy to see you guys. Thank you for tuning in to the Sabrina Marie Show, and I can't wait to see you again. You have a great day.
Thanks.